Okay, guys, so I want to just go through the Ichimoku cloud, just dumb it down a bit for you guys. So what I'm using here is the Aussie, but I'm using a 5-minute chart just to give you an overview of how Ichimoku works as a concept. So there are a couple of very important elements to Ichimoku, and the first one is obviously the cloud. Okay, now the cloud really just gives you an indication of whether you are in a bull trend or a bear trend. You need to take cognizance of it, but it is not the most important part of Ichimoku. Okay. Then you have three lines. So the brown one, which is Siku span, okay, which is a lagging indicator. So it is a moving average, basically calculated 26 periods behind current price. So if you look what's happening here, this is the live price happening here, and you can see it mimics what price is doing, but 26 periods behind. The cloud will follow price, which is also basically two moving averages, top and bottom, which are calculated, but those are 26 periods in advance. So you'll often hear people saying our future is bright, meaning there's a thick cloud here and it's green, which means price is going up. But as with all indicators, this is a lagging indicator, so you need to keep that in mind. You then have the red line, which to me is probably the most important concept of Ichimoku. And this is basically um, Tico span. Okay, sorry. Um, so basically you've got two extra lines here, the blue line and your red line. Now, if you come in here, you'll see blue line is Tikan Sen, okay? You can see this one here. You've got Kijun Sen, which is your red line, okay? And we've spoken about Chiku span, and then the cloud is made up of two moving averages as well. Right. Now, if you're looking for more technical detail, you can Google it, you can work out what the calculations are. I think for purpose of this video, it really is just moving averages which are calculated. Okay. The cloud is essentially moving average crossover strategy. We have a moving average crossover strategy with Tikan Sen and Kijun Sen and Siku span. I'll explain how you utilize that now. So, concept is quite simple. When we are in the cloud, so when price is hovering above cloud, in the cloud, like it did during this period here, there is no direction, okay? So everything is neutral, price isn't going anywhere. When price breaks below the cloud, like it did here, okay, normally that indicates that we have some bearish action coming. But there are three other things that you're looking for to confirm the bearish action. So the first one is Siku span needs to be below Kijun-sen and Chikin-sen as well as below the cloud. So at this point here is the confirmation that there is bearish action. And 26 bars ahead will be around here. Also, you'll see that uh, Kijun-sen red line is on top, pointing down, and Chikin-sen blue line is underneath, pointing down. Okay, so that indicates that we are pointing to the downside, we are moving to the downside. The other element that you'll notice is the cloud goes from green to red, and this is known as your twist or your crossover at this point. So if you work 26 periods in advance, you would have seen, let's just put a line in here so you see what I'm talking about. So 26 periods in advance from here would have been around there, okay? So, okay, so 26 periods in advance to the cloud, you will see the cloud is pointing down. It is also red. You've had a crossover. We're below the cloud. So those are all bearish indicators, okay? Now, we'll talk about price and how price reacts to the cloud just now. So let's just focus on what is bearish and what is bullish. And as you can see, price falls to the downside, falls to the downside. Then we start going sideways again. So from a price action perspective, we're going into a range. From an Ichimoku perspective, we are looking for Sikuspan to break through the cloud. It does over there, right? Broken through the cloud. We're looking for a moving average crossover here now. So we're looking for Tikan-sen and Kijun-sen to cross over and point up. And you can see that happens over here. Okay. Ideally, we want this cross to happen above the cloud because it is a more bullish signal. But even though it has happened here, it is still a bullish signal. But you've got 3 ratings, so that's kind of a weak signal. If it happened in the cloud, it would have been a strong signal. If it happened out the cloud, it would have been a very strong signal. Okay, so let's clean up. Okay, so recap. When we are breaking below the cloud, and Sikuspan breaks below the cloud, and we have a Tikan-sen and Kijun-sen crossover pointing to the downside, we have downward pressure happening and there is selling taking place. The opposite is true when we break through the cloud. Okay, so when I say break through, I'm talking about price breaks through the cloud. Sikuspan breaks through the cloud. We have a crossover, and then eventually Kijun-sen and Tikan-sen breaks through the cloud. Okay, so that is kind of the broad concept. And you can see here how we went sideways. So we're in a range from price perspective, but then Kijun-sen and Tikan-sen we had a crossover outside the cloud. They both broke through the cloud. Price broke through the cloud as well, and Sikuspan broke through the cloud. So all of these signals here are indicating downward pressure. And you can see the downward pressure. Now, when price stays below Tikan-sen, which is the blue line, like it's doing here, it just touches and it bounces off and it bounces off. That is an indication of an exceptionally strong trend. There's no reason to get out of this short. And in fact, you would be looking to add to the short on the way down. The minute price starts breaking through here and starts heading towards Kijun-sen, then there are some warning bells that are starting to come into effect. So again, price action. So it'll either range to Kijun-sen, bounce down, okay, continue on its journey, or it could just be a final flag, or it could be a move to the downside. A reversal back, a move back to the upside. So essentially, as soon as you start going sideways with price, you need to look at your price action to say, okay, we're in a range now, so what can happen? We can either break up or break down. And if we've had 3 or 4 pushes down, probability is we're going to retrace in the opposite direction that we're going anyway. So let's have a look what happens here. And you'll see that we go sideways. Kijun-sen and Tikan-sen start coming together. And that's the other thing about these 2 moving averages. When they're far apart, just eliminate all the noise to the right. But when they're far apart, like they are in this area here, okay, there is a indication that it's going flat. In other words, something's about to happen. We are ranging, so we're either going up, down, but when Kijun-sen's flat and Tikan-sen's flat and they're far apart, they will pull together somewhere along the line. And you can see they come together, they cross over, price crosses through, and now price sits above the blue line. Now this is from yesterday on the Aussie, okay? And have a look at how strong this trend was, all the way up, until today, where I've gone short at the top here, because on the higher time frames we've hit the cloud, and I'll explain that to you now. Okay, so this is the important part of it. So you're either above the cloud, below the cloud, or in the cloud. If you're in the cloud, you're ranging. If you break above the cloud, like we do here, there's a good possibility that the bullish momentum is going to continue. like it did. If you're breaking through with Kijinsen and Tikinson pointing to the upside like this, the cloud pointing to the upside, everything is hunky-dory, life is good, it's a strong bullish move. Okay, now if you look at what's happening with live price here, price is falling as expected, and I'm going to use the hour now to explain why. So the cloud is always going to offer resistance. Okay, so on the higher time frame here, we're looking for price to break through this cloud. Remember what I said, price wants to stay as close to Kijinsen and Tikinson as possible. So we are far away from Kijinsen and Tikinson, right? Yes, we are getting a bullish twist on the hour, and Chiku span has broken through. So there are lots of bullish signals coming through here. However, we are far from Tikinson and Kijinsen, and they're also going sideways, which is indicating a bit of a pullback. Why would it pull back? If you look here, you see price got to the outside of the cloud and then reversed. Then we got through this section of the cloud, now we got the top part of the cloud and we're reversing. Okay, so when I talk about levels, I'm talking about the cloud. So that is a level. Okay, wherever the cloud is flat will be a resistance level, and that resistance level will play out to multiple time frames. Okay, right, let's just clear all of this up. Right, now what I'm going to do is I'm going to bring back price. So we can take it away from a, let's get back to a candlestick. Right, so now if you have a look, let's go back to the 5 minutes and you look at the same chart now with the candles. So we've moved sideways. Okay, you can see we've moved sideways. When we are above Kijinsen, everything is good, we are bullish. Okay, so if I was, let's say I was looking for a long here, so we're above the cloud, we're above Kijinsen, long here, stop loss below Kijinsen. Okay, and I can just trail my stop above Kijinsen, because once we break through Kijinsen, typically the move is over. Okay, and you can see here, we gradually moved to the upside, had a crossover, and then came into the cloud. We broke through the cloud, came back to test Kijinsen, and we failed to break to the upside, so now we are moving to the downside. But you just need to look at Kijinsen and Tikinson similar to a moving average strategy. So if you have a crossover pointing down, you're short. If you have a crossover pointing up, you're long. Okay. Now those crossovers can happen on either side of the cloud. That's why I say the cloud isn't the most important. These two elements here are the most important part of this. Okay. When price is sitting in between these lines, it normally is a range or a consolidation of sorts. And you can see here how we break through a range from price action, come back, test the break, break through another range on Kijinsen, a breakthrough, then a crossover. So there's multiple ways to play it. You could play the crossovers. So when you get a crossover like that, you're long and you have a stop loss below sort of this bar. You go long there, but then you have a stop loss down there, which is a 180 pip stop loss. Okay. On the higher time frames, if we go to the daily, so you can see, let's go back to right at the beginning. We were inside the cloud here. This is March 2017. So we're in, we broke, we came back to test Kijinsen, stayed above it. Okay, then eventually we had a crossover, short, pull back. We're forming a flag of sort that we thought was a continuation to the downside, which turned out not to be. Broke back through the 200 moving average, and then we had a crossover here and a pin bar on the cross. So long there, stop there, and there was no reason to get out of this trade. So from the 10th of July 2017 all the way up to the 7th of August, there was no reason to get out of the long. Okay, we then started going sideways. Okay, so at this point, going sideways, price action takes over, you play the range. Then we hit the cloud, and the cloud offers support. We get confirmation bar here, we're long. And again, there's no reason to get out of this trade because look how strong this trend to the upside is with T-Consim being followed so closely. Okay, at the top here, we start going sideways. From a price action perspective, double top. Okay, we had a crossover. The cloud offered some support back into the cloud, and we battled a bit, broke out, and then broke back down the cloud. And you can see massive fall to the bottom. We come back, test the break of the cloud, back down, test the cloud again before breaking through again, and then where we are today. Now, the picture that we see today is not very rosy, okay? So, in other words, not very rosy for a continuation of this move to the downside. So your short-term momentum or short-term moving average, which is T-Consim, is pointing to the downside, indicating that momentum is down. But your medium term, which is Kijinsen, is flattening out. So what's happening here is you're looking for these two, Kijinsen and T-Consim, to come back together. Okay, which basically means that it should start swinging around over the next couple of days and start pointing to the upside, which will then force the cloud to do the same. Okay, you can see here we're not making price at the moment, but we are below. So this sequence band is below price, it's below Kijinsen, T-Consim. But remember, this is lagging, and we're on the daily, so the lag is amplified quite dramatically. Look at a different time frame, being the 15 minutes. You'll see how we go all the way back, how we ranged, tried to break through the cloud to the top side, failed, came down, had a crossover, a bearish crossover on the bottom of the cloud, which is an extremely strong bearish signal. Price is below the cloud. Kijinsen, T-Consim is below the cloud. Sequence span, 26 periods back, would have been below the cloud. So if you calculate it from where do we have a crossover? So essentially this whole area here is a crossover. Okay. So you can go from here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 4, 5, 6, 6, 1 there. So at this point you can see we've broken through the cloud. So everything was below the cloud, extremely bearish signals, you're short. And again, your short entry here, the stop would be above the cloud. And you can see how price moved to the downside. The minute we started getting crossovers again, you start looking to tighten stops. I wouldn't start looking for longs at this point because it'll always come back to the cloud first, pull back, try to break through the cloud again. So it'll use the cloud as support or resistance. And you can see here, we did manage to break through, came back, and it broke down to the downside. Now, another important factor about the cloud is the thicker the cloud is, the higher the probability is that it will stay below. So in this situation here, you can see how thick this cloud is. If price started moving into the cloud, you've got a strong probability that a stop up there won't be triggered. Okay? If you look here, how thin the cloud is and how quickly price moves to the downside, it didn't offer any resistance at all. Okay? And you can see here how price stays in the cloud, touches, comes back, touches again, comes back, the cloud offering resistance. Okay, now if you have a look at what's happening from a price action perspective, you can see this trend is probably still very, very strong. T-Consim is pointing up, Kijinsen is pointing up, the cloud is pointing up, although it is starting to flatten out a little bit. And we have multiple levels to the left. So if I go back to the hour, you'll see what I mean by we gapped up, tried to break through the cloud, failed, sellers stepped in and trying to push the price down. So if we break up above here, it'll be a break up, but then always going to come back and retest the cloud. Okay, guys. So just to recap, let's just recap on the 5 minutes. You can see the strong trends. So when Kijinson and Kikinson, so it's the blue and red lines, are above the cloud, as well as price above the cloud, as well as Sikuspan, the brown line, above the cloud, and we have a crossover on the cloud. That is a very bullish signal. So you had a break here, you had a pullback, we stayed above Kijinson. This could have been an entry for your long. This crossover here could have been an earlier entry with a stop loss here, or alternatively, you could have just used a price action perspective and saying that this here is a range, okay, and we're at the bottom of the range here, so, and it's a range within a range. So if we broke above this area here, I would be long. We hit Kijinson, we broke through Kijinson, I move my stop up. We have a crossover, that's confirmation that this long is on. I add another long at this point, move my stops up, and now watch what happens. We get to the cloud, I could have taken profits, expecting it to come all the way back, and when this happened here with this tail, indicating we've got a rejection and it's not coming back, we could have added longs at this point, because now we're expecting a second break of the cloud, which happened. And all the way up, still no reason to get out of the trade. The gap up today was quite far from the moving averages, so wake that up. Sorry, that's early data, so at 7 o'clock, 7:30, so at 8:30 we were right on it, so still no reason to get out, okay. At this stage, this is probably turning into a flag for a continuation up, although we are running flat at the moment, so the jury's out. I still believe we're going to pull back a little bit, probably to the cloud area here, pick up some support here before moving up. And why I say to this area is because of that was the opening bar, so I would expect that to come and get tested, and then we'll move up. Okay, and then obviously for the downside, converse is true. When Sikuspan are pointing to the downside and below the cloud, and prices below the cloud, and we have a crossover, it's bearish, and we are going down. When we are hovering to the top and bottom of the cloud like this, and when a Sikuspan is inside price like this is what they refer to as inside price. It's just going horizontal. Okay, you're ranging. There's no direction. We need to wait for a break either above or below to indicate the direction. A flat cloud means we're flat. We're going sideways. There's no volatility. There's nothing happening. Cloud pointing to the downside, we are full on bearish. Cloud pointing to the upside, we are full on bullish. And again, look at the thickness of this cloud. So the probability of price breaking through this is very, very rare. Okay, hope that helps, and if it makes sense. If it doesn't, ask questions, and then we can focus on individual elements. Catch you guys later.